Matt, what's your word of the day?
So word of the day is unimpressed. Yesterday we had objectively good news. The CPI numbers were in line. This kind of tails off yesterday. As announced, the Trump-China deal was reached, and it's being kind of treated like background noise. Not necessarily bearish, just really the markets were kind of unimpressed, almost like it was already priced in. They were waiting for it.
Yeah, it did seem like it was already priced in. Not a lot of movement after that. What did you make of the downturn after we found out that the licenses would only be for 6 months? We also heard from the president later in the day who said that he might impose some unilateral deals. It kind of seemed like you threw that in the mix along with Scott Bessent saying they might extend some of the deadlines for reciprocal tariffs. So it just really seemed like a lot of different news. What did you make of all of it together?
I mean, you basically said it right there. It's a fluid situation. The agreement was made with China. It's kind of a framework for a deal, yet to be approved. But we've seen how quickly these things can change. And I think we've kind of been desensitized to these negotiations. That 90-day pause does end in July, possibly extended, but we're yet to see where we're going to go from there. I mean, we can't make any judgment right now, really, as policy changes daily.
What do you make of the softer than expected CPI? Does it change your view on any sectors in particular? I was talking to another strategist. They said they like consumer discretionary if we get a softer than expected CPI and inflation remains on that same trajectory to go down.
Yeah, I mean, I think for markets really to push forward from here, it's that big three. It's just the continued, that theme hasn't really changed. It's the calmer inflation, rates need to come down, and some level of policy clarity. We think you need to look at longer term investment areas to work through this, but at the same time, probably the most important thing is look at entry points into beaten up companies, regardless of what sector they're in. So, there's some contrarian plays out there you can look at, but, we're kind of looking again at specific companies, still a stock pickers market. It's, anytime we see a run up like this, like we just did in May, we turn around right back into being a stock picker.
All right, so you're looking at some beaten out names. I think that really takes us to your pick. Your pick for us today is Pepsi. I'm looking at the chart. It's down about 13% year to date. So what upside are you seeing in this company?
Yeah, so on surface, it might sound kind of boring to have Pepsi as your pick, but we're not looking for a quick pop of price. But we don't want to be looking back here a year from now wishing we would have taken notice. I've said it many times. We're a dividend growth firm, and we have to pay attention here. So Pepsi, here we are. They're dividend king. They've got 53 straight years of growth. They're trading at 5-year lows, and they've got a record high yield of 4.3% right now. So it's really hard to ignore. And then you hit the valuation. So their PE is the lowest it's been since 2012, trading at 16 times. It's well below Coke's at 24 times. We know Pepsi's more of a snack company, Coke more on the beverage side. But here, the stock is down 35% from its all-time highs, which is really abnormal for a defensive staple like this. And they've got some headwinds here they're facing, and they're manageable. We think investors possibly were lured away by Treasury yields going higher, and Pepsi is just that traditional dividend growth company with a higher yield. And you got the GLP-1 situation that that weight loss drugs will crush some of the demand for snacks. That could be very manageable. Health conscious eating with Maha and RFK's plans. Certainly. It's going to affect Pepsi. 60% of the revenue comes from snacks, but they're known for acquiring brands. They've got over 200 brands. They just recently acquired Poppy, Siete Foods, Sabra, et cetera. So, it's kind of a strategic play into that category.